Everyone, a very good morning, good afternoon, and good evening to all. Myself, Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will continue our work using the indicator Doji Candlestick. This is the second part of this series involving these indicator, and we will be using the dragonfly formation to look for the profitable opportunities on the bullish momentum. If the momentum is on the buy side, we will look to initiate the trade with the possibility of the momentum to continue, and so we will have a higher possibility of ending the trade on the profitable note if we go for a buy trade. So that's the underlying logic is. In the prior session, I had explained to you how we can define the instrument of choice as the default instrument, and to make sure that the trades happen only on the instrument of choice, I have this formation in place. Afterwards, the position amount was defined at 0 to make sure there is no existing open or pending position to avoid the doubling of the position sizing if there is any existing trade on the system. And this Doji candlestick chart indicator has been added with the time period of hourly with the look back period of 1. So we will be looking at the last hour's data for the Doji candlestick, and we get this output, and it just confirms or deny whether the last hourly candle was a doji candlestick or not. So we get this output value of 0 or 1. That's it. And to look at the price volatility, we are also taking the help of these get historical candle with the candle period being defined at hourly, and the look back period is of 1 and 2 respectively. These two 10-second candle blocks will be utilized to pinpoint the exact entry points, and then these four calculation expression blocks have been added, and this one is simply a newly defined variable where we are taking into consideration the difference between the last hour's candle high and the candle closing price, and then multiplying it with 4, which we will then compare with the last hour's opening price and the candle low to define the condition. So I will give you a brief refresher of what the logic is. This is the Euro USD chart defined for the hourly time frame. We want to trade with the trend, and for that we need the momentum to be bullish if we are going to look for the buy trade. So we are looking for the formation of the last doji candle to be of dragonfly means we have the closing and the opening price of the last hourly candle concentrated closer to the top towards the high price. And to make sure that is the case, we will compare the closing price and the candle high difference with the last hour's candle open and the candle low difference, and we need the wick to be at least not to be less than 4 times the tail, and that means we have to consider the difference between the candle open and the low value, and it should be 4 times more than the difference between the candle high and the candle close price. So that's it. And we also need the closing price to be higher compared to the opening price. And to make sure the momentum has been bullish for quite a while, we will also consider the prior candle's hourly formation, and we need the closing price to be greater than the opening price. So this kind of formation where we have the closing and opening price concentrated closer to the higher price of the last hourly candle, and the prior candle has also shown the bullish momentum, we will look to initiate the buy trade. So that's the underlying logic is quite easy to understand, quite easy to implement. So now we head back to the Visual JForex board. So here we have these variables in place, which we will now utilize to set the conditions, set the criteria for the execution of the trade. So first thing first, we have to take the logical components. So here we get this Doji output value, and it should be greater than 0. So first input greater than second input. All right. Then we consider the last hour's candle formation. We need the closing price of the last candle, which is candle 14, to be greater than the opening price. So we compare auto-created variables, candle 14, candle close, with candle 14, candle open. First input greater than second input. Then we compare candle 15, which is the second last hourly candle. There also the closing value will need to be greater than the opening price. So again, first input greater than second input. Then we will consider the difference between these two variables. We have created this new variable after multiplying the high and the closing value difference by multiplying it by 4. So this DCV should be less than the difference between the last hourly candles opening and the low price. So first input less than second input. All right. Let me arrange this on the lower side so it will become easier to understand. Another logical component of multiple action is also needed. For the time being, I will join it to this last calculation expression block. Now coming back to the logical block, we will be initiating the trade when we see the price rising above the last hourly candle close. So we will compare the closing values of the candle 16 and candle 17 with the closing value of candle 14. All right. So for that, we will need one more of the block. Candle 14 candle close will be the common input. And then we compare it with candle 16 and candle 17 candle close. Candle 16 is the last 10-second candle, so we need its closing value to be greater. So first input greater than second input, and candle 17, which is the penultimate 10-second candle, it should have closed lower. So after that, I am going to bring in the trading block, open at market. So whatever is the current market price, the execution will happen at that price. First input less than second input. So here I will change the lot amount to 0.1 million. The page is going to be 2 pips. Stop loss, we will go with a fixed formation this time around with the risk reward ratio of 2 is to 3. So I will keep a stop loss of 20 pips, whereas we will keep the take profit at 30 pips. Alright, so we have the stop loss and take profit in the risk reward ratio of 2 is to 3. So with this, we have defined the conditions as per our requirement, and the buy side of the equation is complete. So I hope you have been able to understand the logical as well as the execution part of this session, where we have worked with the indicator Doji candlestick and the formation of interest for dragonfly. So that's it from my side for today's session. If you have any query or any idea to share, you can write back to me in the feedback section, and I would be more than happy to take the discussion forward. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there. For carrying out the testing on the historical data, you will need the assistance of the JForex platform. So all these useful links have been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.